And joining me now with a look at how companies are faring is earnings expert and head of research at Wall Street Horizon, Christine Short. Christine, such a pleasure to have you. Thanks for joining.
Thank you so much for having me.
Love to get your take, especially during earnings season. We're not quite halfway there yet. How is it looking so far?
Yeah, we're not even really into peak earnings season this week, but like you said, we hear from a bunch of big names this week. Peak earnings season technically starts next week, but I actually have to say we're off to on a pretty positive note, and I wasn't saying that last season or the season before. The reason being is that more companies are beating on the top and bottom line. Not even necessarily more, but they're beating by larger margins. And that's something that was missing in the Q2 season, if you recall. A lot of companies were still beating. We always see around 80% of S&P 500 companies beat on the bottom line, but they were only doing so by like a penny or two, which investors didn't love. But you're actually seeing a great reaction to the earnings that have been out thus far because the margins have been a little bit better by how much they're beating. And so a lot of that has to do with the fact that sell-side analysts did ratchet down estimates pretty far heading into the season. That was a great catalyst for beats. But we know, like I said, as compared to last season, companies or investors weren't rewarding companies that beat because they weren't doing so by a large amount.
Interesting. So bigger beats, that definitely is a positive, and we've seen stocks react accordingly. When it comes to the big banks, any other specific takeaways for that sector, Christine, as most of those earnings did roll out last week?
Yeah. 6 big banks reported wonderful results, beating on both the top and bottom line, with the exception of Wells Fargo. Even though they missed revenue estimates, their stock popped about 6%. So investors liked what they heard in that report. I feel like the commentary as well was a little more positive. JP Morgan declaring we have reached the soft landing. That's been a question. It's been a little bit up in the air. So we are there. Things are turning in the right direction. I think some of the largest themes that we saw discussed, the consumer, everyone's wondering what is the health of the consumer heading into the holiday shopping season. And the banks say, they're still active, they're still resilient. There is still that bifurcation between high income and low income, and there is a consumer out there that's still quite cautious, but they are spending. They are paying back their credit cards yet at a lower pace, so we saw some commentary around that. Mortgage lending didn't come back as much as expected in this lower interest rate environment, but let's give it time, right? Mortgage rates are still quite high, but that was an area that hasn't quite come back. Investment banks just blew every results out of the water, so Morgan Stanley and Goldman Sachs, because we're in a lower interest rate environment, that makes borrowing more enticing, and so they see a deal pipeline kind of filling up here. And then stocks have been on a tear, so equity trading revenues were much higher, and that offset some weakness in fixed income and commodities trading. So overall, the banks painted a really good picture, a great setup for the rest of earnings season.
Okay, very good to know. We'll get the next read on consumer sentiment on Friday. So that'll give us a sense, too, as to how we're faring heading into the holidays.
Right, and retail sales last week showed that the consumer is still out there. They're still spending. The last few sentiment reads have been improving as well.
Very good point there. So by how much are we expecting S&P 500 earnings to grow here in this third quarter?
So right now the estimate is for about 3.5% profit growth on a year-over-year basis. That's actually come down in the last week, and the only reason being, it's not because of those beats that I'm talking about. Those have all increased the expectation, but that's a blended growth rate, and that has to do with analysts pulling down estimates for companies that have yet to report. And so that actually sets us up, I think, for bigger beats coming up. Analysts went in and they ratcheted down on industrials, energy, and healthcare. But again, that's setting, I take that with a grain of salt because we know why they do it, but that's setting us up for more great results coming up and investors to react positively to those.
I want to hear more about the sectors that you anticipate will see the strongest growth this reporting season.
Yeah, so same leaders that we've been talking about for most of this year. It's tech in the lead with double-digit growth on the top and bottom line. That's followed by communication services, and you've got healthcare in there as well. So those are, again, going to be our 3 leaders. The laggards, on the other hand, we've got energy, industrials, and materials, all expecting a year-over-year decline. So those are our 3 decliners, year-over-year declines on the bottom line, as well as the top line for energy and industrial. So we hear from a lot of the industrials this week, so let's see if we can turn that around. Again, like I said, analysts are really conservative with those estimates, so perhaps when we get some good results, we'll see those numbers grow.
Interesting, and as someone who has followed the earnings space for many years, the volatility that we see playing out in in the energy and commodity space, of course, because of high tensions in the Middle East. What does that usually mean for earnings? What is the lag time in terms of the trickle down for that to actually impact results?
Yeah, well, like I said, energy is still one of the laggards for that very reason. Oil prices have been down. We see the main companies that are driving those estimates down are the big ones: Exxon, Chevron, Valero. So I don't think it's going to be a great earnings season for energy. I think you need a few quarters to kind of work that out. So I would still expect them to be one of the laggards on both the top and the bottom line this season.
Biggest reports that you'll be watching this week that could really set the tone and drive the action?
Yeah, like I said, we're not quite in peak earnings season this week, but we do have some interesting names coming out. Everyone's always watching the Magnificent Seven. You have the first company, Tesla, out Wednesday, and then that follows the week after. We'll get Alphabet and Meta and Apple and Amazon, some of the other big ones. Industrials also. You've got 3M, you've got Honeywell, UPS, I think is going to be an interesting one from a logistics perspective. FedEx came out and said, a few weeks ago that they saw slowing demand. Consumers were trading down to cheaper services because of this cautious consumer environment we're in. What does that mean leading into the holiday season? So we'll hear from UPS later this week as well.
Quickly, Christine, we can pick up this conversation too closer to the bell, but any impact that the election is having on results?
Results, not so far. We will see it mentioned, and we will be listening out for a mention of it within some of those reports. But we are seeing companies that are trying to change their earnings date or have push their earnings date either back or forward to kind of avoid some of those peak days, November 5th, 6th, and 7th. That still is a peak week. That first week in November is always a peak week and the busiest week of earnings for the third quarter. But we've just started to see some companies that either want to avoid that or maybe want to get into that because their results aren't so great, so they're trying to hide it. But everyone knows the focus that week will be on the U.S. presidential election.
Yeah.
There's a bigger chance that those results will get lost.
Yeah. Of course, we also have a Fed decision that week as well, so there will be no shortage of news.
It'll be a busy week, yes.
Yes, for us to cover. Christine Short, head of research at Wall Street Horizon. Christine's going to join me again after the opening bell, leading into the opening bell for more earnings commentary. But stay with us because on the other side of this short break, I'm going to be joined by my colleague Trinity Chavez to take a look at some of this super cool innovation that we're seeing from 3M. We'll be right back. I want to pick up this earnings conversation that we've been having with the head of research at Wall Street Horizon, Christine Short. She rejoins me in studio this morning. And Christine, of course, as we get closer to the peak of this reporting season for these third quarter results, we were talking earlier about the election. How does that impact earnings reports and how stocks might trade if their results do come out in that first week or so of November around the election?
I think what happens every earnings season, every presidential election season, is earnings do tend to take a bit of a back seat, especially that week. All eyes will be on the results of the U.S. presidential election, so you might not see investors react to earnings. Let's say if they're coming in as good as they are now, you might not see that reflected in stock prices if, for instance, investors aren't pleased with the outcome of the election. And so I think that's always the risk, that earnings become sort of secondary to an election of that size. Obviously, the impacts are great. But like I said earlier, some companies try to get out of the crosshairs there by pushing their date either forward or backwards, and so they're trying to get out of that news cycle and perhaps go a bit further when that will be winding down, and then their earnings results can really shine. But that's really the risk, is there's going to be so much chatter about everything else. Will the results get lost?
One of the things that I like to follow at your firm that you track is the late earnings report index, which can give us an indication really about how companies are feeling, perhaps how confident they might be in their actual results. What is this index indicating right now?
Yes, the Leary. Thanks for asking. Yes, this is where we track outlier earnings dates. So are companies pushing their earnings or delaying them more than we've seen historically, or are they advancing them? The reason this is important is because academic research shows that companies that delay earnings reports tend to report bad news when their report comes out, and vice versa is true. When they pull their earnings forward, then they tend to report good news. It makes sense, right? Like you delay bad news, as long as you can, and if you have good news, you want to run out and share it, right? And so this season we actually noticed, and we link it to the fact that the elections are taking place, and also it's a leap year. We've seen more companies delaying, and so The baseline's 100, the reading. Anything above that is showing companies are a bit uncertain. And the reading this quarter was 278, which is extremely high. But we went back to during other election years, which always coincides with a leap year as well, and noticed the same pattern. So I wouldn't say CEOs are feeling less uncertain. I would just say, again, it's companies moving their date because they don't want to be stuck in that election coverage. Because if you look at the commentary just from the bank CEOs, it's all been pretty uplifting. And so I haven't seen anything that coincides with companies being more anxious. We did see a little bit of that last quarter and the quarter prior because, there was still a bit of uncertainty in the air. But the very high reading in the Leary we're seeing this quarter is probably linked to the election.
Christine, stay with me. We'll have more, of course, after the opening bell, but we are going to take a look at that podium here soon. 3M set to celebrate the opening bell with the young scientists up there. Let's take a listen. All right, that was the opening bell. The young scientist is going to join me here in studio in just a few moments once he makes his way down there from the podium. Incredible what he's created at just 14 years old. We'll be hearing more about that innovation in just about 20 minutes time, but I do want to bring in Christine Short, head of research at Wall Street Horizon, as so much of what's driving the market action here at the stock exchange, certainly in these next few weeks, is earnings. And Christine, we've been talking through the expectations that you've been providing as to what we can expect. I do want to dive deep a bit into what are some of the themes maybe that we're hearing from some of these executives, of course, in 2022 and into 2023. Inflation seemed to be the buzzword. Is there any sort of buzzword emerging now among the C-suite during reports?
Yeah, I think there's a lot of talk about interest rates that obviously impacts a lot of businesses. The banks, of course, benefiting from a lower interest rate environment. So there's certainly brings up the debate about how many more and what can we expect to see. Obviously, inflation is very sticky. In the last reports that we've seen, it's still there. We're still seeing high retail sales. We're still seeing, wage growth. So there are a lot of, despite Jamie Dimon saying here we are at the soft landing, there still are some of these sticking points that have folks debating how many more cuts we could see and what that likely means. And like I said, one of the big things is in a lower interest rate environment is we hope to see borrowing increase, specifically mortgage lending. We haven't quite seen that move the needle yet. So we'll be looking for talk about rates for the sectors that it matters for. We'll be looking at comments around consumer health, for all of the sectors that impacts as well, especially as we come into the very heavy holiday shopping season. 25% of retail sales take place during this season that we're kind of in right now. Right now,
Yes.
Almost kicks off with that prime October date and continues through the holidays. So we'll be looking for their comments on the consumer as well.
Christine Short, head of research at Wall Street Horizon. Christine, always good to get your take. Thank you.
Thank you for having me.